Wh- oh, Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with Rocks and Stocks News. And I got a special company to talk about today in Heliostar. The company is run by Charles Funk, and they've recently transitioned from being an exploration company into a miner and exploration company, developer, I guess. And I thought it would be a good time to talk to Charles. Charles, thank you very much for joining me today.
Yeah, thank you, Alan. Pleasure to talk.
So I gotta change one thing. Oh, there we go. Oh, I minimized you. And now I don't know how to get you back on. Oh, here we go. Um, so Charles, why don't we start with Ana Paula? Because Ana Paula, I've been watching you guys for Ana Paula, and I really was impressed with your transition from looking at it as an open pit type situation to focusing on the underground potential, high grade core of that deposit. And what has impressed me all along the way as you've been drilling it is, how important continuity is. And if you have sporadic high grade over here, over here, over here, you have a sporadic and troublesome mine of the future. But that core has turned out to be quite impressive on the continuity and expansion potential. So let's start there, okay, Charles?
Yeah, it's an astute observation. It's quite stunning, that continuity. For those who don't know Annapurna, you can think of it as this giant sea of low grade. The global resource is about 2 million ounces, but there's a bit over 1 million ounces in the middle in a 60-meter wide high grade structure that averages about 5.5 grams per ton gold. And that was the opportunity that we saw. The previous operators were going to go down the open pit pathway, and we wouldn't have bought it for the open pit. Those pre-strip, it's 22.5 million capitalized pre-strip. And as we'll get to, there's a good part of the ore body and there's a bad part of the ore body from a recovery perspective. So that meant they had to take what we considered to be some risks to make the low grade part work. And so we had no particular interest in that approach. Our view was, let's go straight into the high grade. It's lower cost. You get into the better grade up front and you make more money. And what we saw was, even though this had been drilled fairly widely spaced, like what's reasonable for an open pit is not necessarily reasonable for an underground. And the resource model kept going high grade, low grade, high grade, low grade. But when we looked at them, all the resource parts of the high grade was where there was a drill hole, and the low grade in between, there was no drill holes. And that was just the resource model being appropriately conservative. And so we drilled in between and we changed the orientation. Most of the drilling was from west to east, which was fine for the big deposit, but you needed to drill from north to south to accurately represent this high grade panel. And so the combination of those two things turned out to be very successful, even more successful than we thought, to be honest. And we consistently drill 5 to 100-meter intercepts at 5 to 15 grams per ton gold. And it's consistent. It's not a very piece of high grade and a lot of Mexico and another piece of high grade. It's consistently, evenly 2 grams to ounce, ounce and a half material, sample after sample after sample. So it's a wide, high grade ore body. And at the end of the day, that should translate to high margins.
And that's suitable for bulk underground, or would it be like a network? How would you go at it after that?
Yeah, so we're just finalizing the flow. So for, again, people who don't know, we're completing a feasibility study that we plan to have completed by the middle of next year. That's our construction decision. So we're just finalizing the flow sheet at the moment, which then everything comes behind that. The anticipation is that it'll be long hole stoping, which is a bulk underground mining method. You can only do that when you have big, wide undergrounds, and this is wide disseminated, so it lowers the mining cost, which is pretty cool.
So have you guys done, you haven't done a PEA on it yet, have you?
So it's an unusual project in that there was like it's permitted for open pit mining. It's had $100
Right.
million spent on it. It's had a PFS on the open pit. So we put out a resource update in late 2023, which was the first underground focused approach. And now we're bouncing back up to the feasibility study. So it's an unusual journey for a project to go from PFS to resource update to FS, but that's the nature of us changing the scope of the project.
Right. And have you guys got any sort of ballpark idea of what your cutoff grade would be? Like what would be the estimates of the or ballpark of the cost to get at that high grade panel?
Yeah, so what we're there's a couple of ways, and it also gets to talk about the good and bad part of the deposit. So the very high level numbers, I think you're talking around 250 million capex for a 1,500 tons a day mining scenario, which is a pretty large underground mining scenario. And so they're just general ballpark numbers. To be clear, we haven't
Right.
completed the studies, but just to give people a feel for what that is, we think we can produce around, we would like to produce around 100,000 ounces a year on average for the mine life. And so then you sort of go into the more specifics. So the knock on the deposit before we bought it was that part of it's considered refractory, meaning it's difficult to get the gold out cheaply. And so our approach was just to accept lower
For
grade,
the
lower.
non-geologist out there, what that means is that your gold is kind of contained within sulfides, right?
Correct. There's a number of
Right.
ways you can have problems, but that turns out to be the way there's a problem. And so what was the real surprise for us is the system appears like it started out depositing gold in that way, but by the time it finished depositing gold, it was free milling, which means it's easy to recover.
Oh, nice.
And to our great surprise, which we didn't know originally, was that the high grade panel has better recoveries than the rest of the deposit.
Oi.
And, and so our original plan was to go and do a very vanilla conventional flotation of the sulfides, put them into a CIL plant and get recovery. And just focus on the material that was easy to recover. At these gold prices, we are looking at some of the other material as well. We're looking at whether you do a biox or something relatively cheap to add on to get more gold out. You wouldn't have done this at $2,000 gold, but the gold price is materially higher. So we think that would then lead to so if we do a conventional float and CIL, you're probably talking 3.5 gram cutoff grade. If we bring on some of these other options that we're looking at the moment, we would drop that to around 2.5 grams.
Oh, wow.
So that gives us a potential to recover more gold from the same volume and make more money out of it. So we
And a
spent a
nice
lot of
healthy
time.
margin.
It's Anna Paula, I suspect, could have below $1,000 ASIC.
Oh my
It,
gosh.
it should, it should produce it's got so many things going for it. It's wide, 60 meters wide. It's high grade, 5 gram plus material. It's shallow, all of the high grade panel is within about 250 meters of the surface. We can do bulk underground mining, as you talked about. We think we should be able to keep sort of 25 by 10 meter stopes open. And then the best maybe part of all of this is there's 200,000 ounces over 10 grams. That's right where we would begin mining at Anna
Oh
Paula.
my gosh. So that
So,
pays for everything.
so we believe that we could be in a position to have some extremely attractive economics when we put this study out for Anna Paula. It's pretty unique to have all these things in your favor as we do that.
Well, that's part of the reason why I picked the company, Charles. And then recently I've taken a fairly healthy position in the stock is because so far as gold has moved up, we've seen the majors, your companies such as Agnico Eagle and Alamos Gold, have just been absolutely outperforming the price of gold. But until this year, we hadn't really seen that work its way down the food chain. Uh, and in February, I wrote a report that I wouldn't have been able to write in 2024, which was that I saw a bunch of companies, I took them from their December closing prices. And by that time in February, a bunch of them had made significant breakouts, including Heliostar. And like I said, I could, it's not because I wasn't good at picking the right companies, but it was because it just wasn't happening. You weren't seeing where, the Agnico Eagles, Alamos, and then down into the developers and into the explorers with important discoveries were moving at all. And so, I've been in this business for 30 years, so I kind of know the pipeline of what's available out there as far as high quality developers with important discoveries. You use the word unique, and that's a fair word to use.
Yeah, there's not many projects like Anapola in the world, and we sat there. We knew we had a great project, and the market was softer, say 12 months ago and before, and we were just trying to find the best way to build Anapola with a much smaller market cap in a market that wasn't as supportive of gold price. And we've had two pretty significant tailwinds since then. Obviously, what's happened to the gold price is incredible. This is a generational gold event, in my opinion. It's not
Absolutely.
normal cycles. And that all makes us look more clever than we are. It's an incredible background or tailwind to be building our businesses in. The other one is by buying the producing assets off Argonaut as they kind of gave up on Mexico. Now we have a pathway to building Anapola with very little to no equity dilution. And that has a huge impact for the value, the amount of money that we can make our shareholders if we deliver.
Well, I want to talk about the transition to becoming a miner, but you brought up gold, and you know, I I don't think that a lot of people really understand what is happening with gold, even long-term bulls. And what I see is happening is that the debt and the fiat currency system is broken. And that is why gold is trading at record highs against every fiat currency. And ultimately, what I think is happening is we're in the transition to a gold standard 2.0. Whatever form that, comes up with, I don't know. But, with all these central bankers buying gold, um, they're taking a lot of gold off, above ground gold off the market. And so my central thesis is that, they can look after the gold price. I think they're going to drive it to multiples of its current level. But where the real opportunity is for investors is that although this is happening with the central bankers of the world, it really hasn't started to move into the gold miners. Like they are high cost producers now are making about $1,000 an ounce. Low cost producers are selling gold for double of what it costs them to get it. So this is my bullish argument for gold and the gold miners, but it also plays out in your transition to becoming a gold miner because you did it when nobody was really paying attention to projects like what Argonaut had.
Yeah, I think, to talk broadly about your gold thesis, I think objectively, gold bugs, if you want to use a term. I come at this from the technical side. I'm a geologist by training, and that was my introduction. I started in copper and then wanted to build a business and transition into gold because it was easy to find gold deposits and it's cheaper to build them. So I came at it from a business building perspective. And I think everyone has to acknowledge that the thesis of gold bugs over the last 20 years is playing out in real time. It's taken a long time for for the tipping point to be reached. And in some ways, a lot of people have sidelined and ridiculed that scenario. But I don't think anyone can now. You truly
No,
recognize that all major currencies are debasing against gold, and the whole argument for owning gold is playing out in real time and incredibly at $100 a day movement in the gold price right now, like day after day. That's vindication of everyone out there who was, when you say pro gold, you mean skeptical of government's discipline. And you're seeing that played out in real time. And that's absolutely to the
not
benefit of.
just on a monetary front, but you look at the spending and you look like, for example, we're in the middle of a trade war right now, but in reality, the timing couldn't be worse because the United States has $37 trillion in debt. The cost to service that debt is now over a trillion, which is about 20 some percent of what the country brings in from taxes. So, this to me is a death spiral of debt that really, gold is the perfect, contrary play to that. But then you've also got stagflation starting to kick in because of all the tariffs and the mass deportations. So really, there couldn't be a more perfect storm for gold. And still, the gold stocks are, they're free cash flow machines, building up cash at an incredible rate. And the gold in the ground is still being priced like gold was half its current price.
Yeah, I think again going back to when we were putting the financing packages together, we were all like when the market wasn't there for gold over the last couple of years. People didn't like our strategy until the last sort of 12 months, which is why we were able to get things as cheaply as we did. We always got a better audience in Europe, in places who had seen their currencies debase. Americans had never really experienced that, and I wasn't around to see that late 70s, but there was a little taste of it as Nixon came off the standard. I think every time no one truly becomes a gold bug until they see their purchasing power erode. And the scariest part of all of this is there's not a government out there in the world who's talking about spending less. They're talking
Nope,
about trying to strain it, but none of them are spending less.
nope.
So, no, you're absolutely right. In some senses, the gold price is up because led by central banks. The people who are buying gold are not the people who are buying stocks. But eventually, the return, we had a sub 1500 ASIC last year, last quarter of last year. Um,
Wow.
so we were operating on an over 70% margin last year. And again, dovetailing what I think technically with this bigger picture is we've always focused on high grade projects because high grade projects equals profitability. If you've got a low grade project and the gold price is up, we know eventually costs will go up. Labor costs will go up. The world will come out of recession. Diesel costs will go up. These are two of the biggest drivers of costs in gold mining. And they'll all, like gold's historically had $200 to $400 margin outside of these periods, and they can be multi-year periods that we're in now. So you harvest cash flow in periods like this, and make sure that you're investing them in mines that still make a good profit on the outside, on the other parts of the cycle. And so our technical philosophy has aligned with these market circumstances to give us, the best tailwind we could hope for to build shareholder value at Heliostar.
Well, when I write about Heliostar and I talk to people about your company, Charles, I've sort of watched your career through the tremendous success with Vizsla. And I think that's the next Silvercrest 2.0 kind of. And I picked Silvercrest when it was transitioning to a miner, so it turned out to be a great pick. And I look at Vizsla, and what originally got me so excited about them was the success look what you were part of, which was the exploration side. And I had sort of followed your career for some years because you worked with another company I was aware of. And so I always recognized your talents when it came to the geological side of things, Charles. But what you've done in the last year or so, it also speaks volumes about your head for business, the business of gold mining. And I liken it to maybe a young Ross Beatty and people like that. You got a ways to go yet to
You can
to
say
get
that
in
again,
that
please.
echelon, Charles. But even though those kind of operators, they started from where you are now, and there is a certain footsteps that they've left. And I'm really impressed with your business acumen, Charles, and the timing, maybe some of that's luck, but luck and opportunity you have a way of meeting. So I guess that's a perfect segue into what you did to start acquiring and turning your company into a gold miner.
Yeah, so I think it goes back. It's funny, this gets a little bit, maybe a bit touch too going a little too far back, but I grew up on a farm in Australia, and in the 90s, farming was a really tough business. There was no money in
Well, I
it.
grew up on a farm too, Charles, and I can tell you, I'm 60 years old now. It's always been a tough business.
Yeah, exactly. So, anyway, when the scientific side of the geology side, that technical side comes from my father, and mum kept the farm going. I think the entrepreneurial side comes from mum, and so I was lucky that I worked for very credible companies in Australia. A company called Oxyano Minerals that BHP bought, and Newcrest. And so that taught me the science side of the business. But I wanted to be more entrepreneurial, and I was doing a lot of work in Canada. So I came over, and you touched on Evrim that became Origin. Um, we had some considerable successes and failures, but ultimately success. It's worked very well, Origin royalties. And then
Now
Visa
you're
was,
getting into a bit of my background because Patty Nickel, Scott Weeks, Bob Singh, we all worked together for like a decade. And so we all have that sort of foundation of, rocks before stocks kind of thing.
well,
Uh,
that's exactly where I'm heading in this, in that now, and it just shows you how small our industry is. People, it's very easy to work out whether someone's credible or not, because we all know everyone. It's not a very big industry. It's surprisingly small given the amount of capital that's in it. Anyway, you touched on Vizsla. Vizsla was a life-changing success. We took a company from a few tens of millions of dollars to, I think today it's nearly $1 billion company, and very proud of what the Vizsla team's achieving there. It's a very high quality silver project. But I always wanted to build a mid-tier producer, and Sam Anderson and Mahesh Lahanaga, who we founded the company with, had a view that you need to be big enough to take advantage of all parts of the cycle. If you're just pure exploration, you spend extended period of time where the right decision is to do nothing. And we didn't have A, the patience, or B, the wealth to do nothing for extended periods. And I'd worked for the biggest companies like Newcrest, where you're so big that nothing really moves the needle. And so we knew that there was kind of a sweet spot if we could get, 3 or 4 or 500 to 200,000 ounce a year producing assets. And what drove us in our decision making was we're a very we'd like to think that we're a technically rigorous team. We make our decisions on forming our own opinions. If we took the consensus opinion in Ana Paula, we would have done what everyone else did and not bought it. But we saw an opportunity, in particular, Sam Anderson saw an opportunity, and Sam, our VP of projects, clearly deserves the credit for this, to see Ana Paula as an underground and see that continuity that you talked about. And so we come from that sort of very first principles basis of, has there been overlooked value? And then, so therefore we're not, when you don't have a lot of money, you can't compete we couldn't have knocked on the door of all these Newmont sale processes because our checkbook wasn't that big. And so we had to go to other areas, and we knew Mexico very well. The previous president, as you know well, was probably the most anti-mining president in the history of Mexico. And gold equities had no value, and we found a company that was in distress at that time. And so we got very good deals. And so we've tried slowly to change our reputation from being a team that's done well technically to try and build a business reputation, because we need that to lower our cost of capital, because ultimately whoever has the lowest cost of capital will win in this business. So we've always wanted to build a producer. It's been that ambition to be a 500,000 ounce a year gold producer has been on our slide deck for nearly 2.5 years now. We've just tried to navigate as we could with our capital constraints, and therefore we've taken a longer term view than some other companies, and we've looked at assets that other people might have had a first glance opinion on that we thought we might be able to change their mind on.
and the deal structure, here's another footstep of some of those luminaries I started to talk to about you regarding. Um, the deal structure was quite impressive. You went from having a liability to getting rid of the liability and also acquiring producing gold project mines.
Yeah, and the further you get away from the deal being done, the harder it is to understand this in the sense. So Ana Paula had sold for over $100 million in 2015. It had over $100 million spent on it, but Argonaut was building a mine in Ontario. They had no attention to it, so they were happy to monetize something that in their mind was non-core.
And by
Um,
the way, folks, they were having problems in Ontario and they had
this
to
was at the
put,
beginning of the problems they were starting to have, and
right. So
so they were happy to.
they had to put a full court press on Ontario, and that left what they were doing in Mexico sort of getting underloved.
Correct, absolutely. And so step one was we bought Ana Paula. We paid 10 million at the time, which was more than the company was worth. We raised more than our market cap to buy it. It was our true swing for the fences. But we owed 20 million, as you touched on, in milestone payments on a feasibility study, construction decision, commercial production. And then, as you said, luck plays a role. Last year, Argonaut decided after Magino fully blew up the company, I think is a fair independent assessment. Alamos bought it and spun out the residual assets, and Argonaut decided to sell everything. And there was a weird quirk in the deal terms in that for them to sell Florida Canyon to ultimately Integra, they needed someone to buy the Mexican assets to go through a Mexican antitrust process. And none of
Okay.
the US-based companies wanted to go to Mexico for that. So they needed a
Because
buyer
we
in
were right
Mexico.
in the midst of the AMLO regime.
Correct. You had the anti-pit mining rhetoric in the lead up to the election, which has since proven to not come to fruition. Forget that still no one wanted to buy gold equities this time last year.
Exactly.
So and it looked like these mines were coming to the end of their mine life because no one had put any capital into them for 5 years because they were trying to survive in Canada. So it was the perfect storm where these assets were too small for the big guys, but too big for most little companies. Anyone could have bought these assets. It's not like we had some special in that anyone else had. We just took a view that Mexico has a mining DNA, has an English rule of law, a rule of law based on English law. Um, it's always had a long history of mining, and we thought it would find a way through. So incredibly, we cancelled the 20 million that we owed Argonaut for a $5 million acquisition price, which in today's gold prices is ludicrous, but at the time was a very fair deal. It was the best deal that they got offered.
And they were kind of in a forced situation where they had to, which is why you were able to negotiate good terms.
Yeah, it's a good lesson as a management. If you do find assets in companies where management isn't focused because they don't value them. Management of Argonaut had spent all its time in Nevada and Ontario, and therefore it wasn't paying attention to Mexico, so it wasn't looking for opportunities. So it just saw the problems, in my opinion. It didn't see the upside. And, in 6 months, we've taken La Colorada from an asset on residual leaching going into shutdown into a 6.5 year mine life with restart of production. And we think we can grow the mine life beyond there. A small part of that is the gold price increase. It's clearly made everyone's life easier, but a big part of it is just a new vision and finding new ounces because they hadn't been drilled because all the capital, like there was no tax shelter in the assets that we bought of Argonaut from the two operating mines because they were profitable. Unfortunately for them, that cash had gone to assets in Nevada and Ontario. And for the first time in modern history, the cash flow coming from the Mexican mines is going to fund the future of those Mexican mines, and it's looking quite bright.
And, that's sort of a model that some people, friends of mine in the business, have acted on very favorably in the past, which is to look for projects that you can get at a reasonable price and then enhancing them with the truth machine, the drilling. And recently you had some really good results out from La Colorado
Yeah,
drilling.
La Colorado's a great mine. It built El Dorado, now multi-billion-dollar gold major in the 90s. It built Argonaut in the 2010s. If you look at the historic mined resources and the current resources, it's about a 2.5 million ounce deposit, and we think it can expand from there. So it's turning into quite a significant district. It's always just been mined at a sort of steady rate. So it's always been about 50 to 100,000 ounces. It's
So they
never
would
been
keep the drilling a little bit ahead of the production, but not really test the overall system.
that's been the biggest surprise. So when we got there, the immediate win that we had, which was, in large degree the gold price moving, but we recognized two stockpiles. One which we've drilled off that we're going to recover 20,000 ounces of gold from this year, and we're just about to drill a second one that's slightly older, so we think it might be slightly higher grade. So that's like just that stockpile alone was worth more than what we paid for the assets. Uh,
Wow.
and so we knew that that broke even at about 2,200. So obviously it looks very attractive in the current environment. And so then we had these two open pits that we could look to expand. And effectively the company had stopped doing the stripping. So that was a new capital project basically to get back down to mine more ore at the bottom of the pit. And the most amazing sort of observation was the resource. It wasn't constrained by drilling holes and working out where the gold stopped. The resource stopped because the drilling stopped and no one knew what was out here.
Holy
So
moly.
we've been quite aggressive drilling, converting material that's assumed to be waste into what we hope will be ore when we put out an updated study at the end of June.
So
And
that's kind of the pit constrained part of it laterally. But what I also saw was some high grade hits at the bottom below
Well,
the pit.
that's the next part of the puzzle. So the great part of the Colorado is there's a number of very high grade veins that have been historically mined underground, but they bulk
Are
out to make
those
a nice
epi
pit.
are those epithermal veins?
Yeah, classic
Okay.
low sulfidation epithermal. And so the headline hole in the press release, last press release we just put out 10 days ago, was just under 9 meters at 25 grams gold and over 700 grams silver.
Whoa,
Um,
whoa.
so we think
In a
there is
place where you underground mine for a gram or two.
yeah, and it's all oxide, and so maybe you can be as low as 2 grams as a cutoff for this. So we think that there's underground potential beyond the open pits. So we think we can extend the mine life beyond the 6.5 years that we've put out at the beginning of this year. So improving the economics of the resources that we know we have, and then starting to look for more. There's very little drilling at La Colorada outside of the pits or the infrastructure. And there's a lot of reason for optimism that we can add ounces. There's great exploration targets, there's open resources, and there's some really nice underground potential. So we've immediately focused on improving the economics of the pits. And now we can move to looking to define an underground future for La Colorada beyond what we've done now. I don't see there's any reason why La Colorada can't operate for well over another decade and build its third company in Heliostar.
So just for the non-geo out there that are interested in La Colorada, I might butcher it a bit, but I'll let you clarify my look at it. And it sounds to me like you had the top of a vein system that then the gold made its way into an oxidized zone that was mined, but you still got the rest of the roots or the to look for the boiling zone. And it sounds like you're maybe starting to tag into a boiling zone. Did I get that right?
Yeah, almost correct. Like we are in the boiling. So for people who aren't geologists, the boiling zone is where a fluid carrying gold comes up, and you get a void space, an empty area, and you get what's called deep pressure boiling. So everything's a boiling like boiling a kettle, and you turn liquid to gas with heat. Think of it like stabbing a can of Coke, and it comes fizzing out from liquid to gas. So when you go from high pressure to low pressure, the liquid with the gold vaporizes and the gold gets precipitated. And we're getting a bit deep, but that's how you form these epithermal veins. and they're happening under every Yellowstone in the US, Rotorua, Iceland. They're happening under every modern kind of geyser field. And so
And
incredibly,
all these fantastically profitable mines in Mexico are in the guts of the boiling zone of an epithermal vein system, such as
correct.
Vizsla. Yeah.
Correct. Like 30, 60 million years ago, these would have been tourist places to go and visit. But skip forward a geological eon in time. And you've got a high grade center where we are, and then we've got lots of low grade around it, which is why you put the pit on it, because you can take all of that profitably. Eventually you get to the point where you may as well only focus on the high grade, which is where you're heading. And that's what we'll chase as the underground. So yeah, very interesting deposits to explore. Deposits very close to my heart to explore. I've had considerable success in them. I think I know them very well. They're great deposits to explore. And so you can have a lot of success in them if you know what you're doing. And again, that comes back to our DNA, a technically driven team that now for the first time has the capital to unlock these projects in a way or with the care that they mightn't have seen before.
And you look at a company that I know really well, which was Silvercrest, because I started picking them when they were transitioning to mining. And you look at, they spent $100 million in debt to get the project into production. Within about 3 or 4 quarters of full commercial production, they paid off all the debt and they built up about $200 million of cash. Well, a combination of cash, gold, and silver. And that got them bought out because another company that was about $400 million in debt could erase half of their debt. And so they took out Silvercrest. But that is a classic recent example of how successful these epithermal vein mine systems can be. And I think that Vizsla is the next Silvercrest. And another thing that's quite spectacular about these kind of systems is that you can have parallel structures, you can have blind veins in there. Sometimes those blind veins are just spectacular, such as what Mag Silver has at Juanicipio by Fresnillo. So, yeah, I mean, it's a great time to be doing something like this. And you get you get the cash flow to be able to do it at La Colorada, your other acquisitions, and the Anapola.
Well, that's the analogy for us is when we closed this transaction, so we borrowed $5 million to buy. We didn't do that as equity. We borrowed that money, and
Uh-huh.
so we had about $2 million US on the balance sheet at the beginning of November last year when the transaction closed. We grew that to 5.5 at the end of December. We grew that to 14 from operations at the end of March, and we paid off the $5 million in that period. And then we did the top up capital raise, at a 52-week highs with no warrants. So we've got 27 million US in the bank right now. And
And
so,
growing.
and growing. And so and then you look at La Colorada and San Augustine, our two operating mines, has the potential to generate around 120 million in cash flow over the next 2 to 2.5 years, and probably needs 10
That's
to
cash flow, but there's a huge margin in there too. So
correct.
that
So
turns it.
where I'm heading here is we probably need about up to, say 30 to 50 million of investment to unlock that with pushbacks of pits or expansions of leach pads and the like. So
Okay.
we can generate a huge amount of free cash flow from our operations over the next couple of years. And the impact of that is it means that we could bring or have the high potential to bring Anapola online with very little to no equity dilution. And so if
Wow.
we can deliver a company producing, say in the order of 200,000 ounce a year of production by 2028 with very little to no dilution, that should be, that's my business proposition to shareholders. That company is not worth 250 million Canadian. It should be worth over $1 billion. And we've
Right.
got this unique opportunity because of the cash flow positive nature of our operations to get to that goal without dilution, which very few other developers have.
And then that puts you into something I've talked about since probably the 2001 to 2011 gold bull market, is that there was a lot of consolidation in the business during that time. I remember the 1990s, and there was a lot of majors, there was a lot of mid tiers, there was a lot of junior gold miners. But because of all that consolidation, now there's fewer majors, very few mid tiers, very few juniors, miners, not explorers, miners. And so, therefore, there's a business opportunity that looking at projects that are not big enough for the majors because they become such behemoths that could turn a junior miner into a mid tier and beyond. And you kind of got a carte blanche sort of situation, especially if you're executing on that path.
Yeah, it's actually I'll explore something I don't think I've talked about publicly before, but given we've embedded the geology with the business in this interview, the clearly in my opinion, and having worked for big companies, I've seen it. ETFs drove this business for the 10 years post 2011 to recently. And so what's happened there, in my opinion, is companies have got bigger and bigger and bigger just to get a bigger percentage of the ETF because there was no other buyer of a gold equity over the last decade. And so that's why you saw, the mega mergers, Randgold, Barrick, Agnico getting bigger, Newmont, Goldcorp, and then Newmont, Newcrest. All this is a race for size. And the impact of that means, even when I was with Newcrest, we'd look at 100,000 ounces as our bottom end. Now, big gold company would laugh at anything above 250 million. And so that makes sense on a spreadsheet. Of course, you don't want to be spending, if you're producing 1 million ounces of gold a year, you'd rather that come from 4 mines than 10. But what it ignores is geologically, there's very few ore bodies in the world that naturally come out at 250,000 ounces. If you go back through history, mines have been built over multiple centuries from a cash flow basis. And they start small, and the ones that don't make money die, and the ones that make money grow because they've got the free cash to invest. And so I would argue that most deposits start out in that 100 to 200,000 ounce range. And
It
after
certainly did early in my career, and I started in the early 90s, and that was the way
did it in
companies
all the
were
gold
built.
rushes as well. The guys who got into the paying shoots bought their neighbors and consolidated, and they got and so it's kind of something that I think is a bit lost. That yes, you can sit there and say I'm only going to buy 250,000 ounce a year producers, but they're 5% of the world's mines. It's very difficult to grow a business or expand a business in that
I want to
space.
be as handsome as Brad Pitt too, but
So you've got to start just getting some acting lessons and maybe going to the dentist. What we want to do is, our view is, we think we've got good technical insight. So if we get 100,000 ounce a year producers, my belief is that one will probably let us down. We'll have made some mistake technically, and that means it underperforms. Three on average will come as advertised and deliver, and one will surprise us and could potentially then grow into that bracket, and you've got a tier one gold asset. And so look at Ana Paula, for example. We've got just over 1 million ounces of very good grade there now. But the two closest deposits are a 15 million ounce deposit and a 20 million ounce deposit at the Morelos complex and at Los Filos. And we know that geologically we're more shallow in the system, and we've got really good depth potential underneath. Those big deposits would sit geologically deeper than us. So we've just got to get the decline down, do the deeper drilling. There's holes like, 13 meters at an ounce, 40 meters at 6 grams. So if we go shopping for projects in good districts, we've got an increased chance of finding, growing one of our deposits from 100,000 ounce a year production to 2, 3, 400,000 ounce a year production. And so philosophically, I actually think the smartest way to build a gold business is in that space than to try and compete with the big companies out there and back our technical nous to try and deliver. So it's not something I've actually talked about a lot before, but you increase your chances of being successful shopping in the space that we've been than other companies are.
And as you're describing that, Charles, you made me think of another trend that I seen since the 1990s and then in the 2000s is a lot of the miners, they became to be run by bean counters and lawyers, not by rock guys. And I think that's to their detriment, because what you're describing is how the rock guys used to build mid tiers and majors was exactly what you're talking about. So it does my heart good to see a rock guy running a mining company, and I commend you for recognizing that, Charles. And you're
Like, to be clear, having people like myself in charge brings a different set of risks. So
sure.
you need a broader team, and we're really lucky. We've got COOs built mines in Mexico, operated mines in Mexico for a long time. We've got a really, in my opinion, balanced team of enthusiasm and expertise. In some ways, I joke that we pretend to be young and cool, but we've got a lot of deep experience in the background that we're leveraging off. I think
Well, from
more
an older
fundamentally,
and not so cool guy, I really like what I'm hearing, Charles, because I've seen it in my career of 30 plus years in this business, how things have transitioned and how opportunities have come up. And you're sort of focusing on those things, which is pretty fantastic.
yeah, we're running out of time, but I think philosophically, all mining companies grow, stagnate, and die. The question is, what's the lifespan? And they grow because they do have whoever it is, whatever skill set, whether they're a geologist, a metallurgist, a banker, a lawyer. If they're entrepreneurial, they'll accept risk and they'll balance risk equally to the upside and the downside. And you create these businesses. And unlike a bank or something else, we deplete our resource base. And as we mature into production, we bring on naturally more risk adverse people. We don't have the high risk promoters. We don't have the high risk money lending or money sourcing. We don't have the exploration geologists promising the world. We start to move into the resource geologist, the network, the legal, the community relations, the debt side of the business. You're naturally bringing in people who are there to protect the downside because the upside's already been unlocked. But the unintended consequence of that is then these companies start reviewing risks as negatives as opposed to forgetting that they're upside. And that to me is what I call that stagnation phase. And honestly, it lasts as long as the resources last because and so if you find Bingham Canyon, that's 200 years. If you find a 5 year mine life, it's 5 years. And I'm in rare, maybe what Pierre did to Newmont might be the only example where you've restarted that process. Um, but it's very rare for major companies, in my experience, to go back to that entrepreneurial spirit. They end up dying or getting acquired. So that's why there is natural regeneration and room for new companies and new mid tiers. And we hope to be one of those with that philosophy. And we'll try and keep our entrepreneurial spirit for as long as I'm involved in the company.
Well, I like your business plan. I like your deal making. I like your projects. I like your management team. And as you said, we're getting close to running out of time, Charles. Why don't you give us a sort of a look forward as to what's catalyst?
Yeah, so in the big picture, we want to be that 500,000 ounce a year producer by the end of the decade. And we think that we can get a long way there with the portfolio that we have now. The 3.5 million ounces of gold we've got, plus another 2.7 when we update a technical report. In the short term, it's growth in production. And we effectively picked up assets that had really scrappy production in that they were coming to the end of their mine life. We're now placing them on a sustainable footing, and then we're going to grow to really quality production when we bring on Ana Paula. That's going to be an increase in production with what we believe will be in conjunction decrease in our capital in our AISC costs. So an increase in margin and an increase in production. Incredibly, we think we can do that with very little to no equity dilution. And if we deliver, we're worth multiples of what we are today. And if you come down to the very short term, we've got more drill results from the Colorado that we just touched on. We'll have results from the next stockpile that we think can add mine life. We'll have just committed to a 15,000 meter drill program at Anapola, which delivers some exceptional drill results for us. We'll put out the quarterly results. We've already put out our cash number, so you can tell it's been a quality quarter for us. And then we'll have technical reports coming out on our assets, that business case to expand La Colorada. We'll complete a tech report in Q3 on Serra de Gaia, and then next year we'll deliver the FS on Anapola. There's a lot of short-term and medium-term meaningful news from the company.
Well, you've made me really happy that I recently bought some stock, and I kind of only halfway to my full position, so I'm going to have to get out there and buy some more, Charles.
I like the spirit. If we deliver what we're trying to, and I'm proud of the track record that we have today, we will build a more valuable company. And the bet is on us to execute. And as management, that's all we could hope for.
Awesome. Let me close it off, Charles. Thank you very much. We'll have to do this again.
Thank you very much.
Okay, there you go, folks. Well, we laid it out pretty well for you. As always, bear in mind my bias. I'm a shareholder, but I buy shares for reasons that are based on my 30 years of experience in this business. And we talked about a lot of those opportunities that the company is executing on. But as always, do your homework, speak with your financial advisors, go to their website. Another thing I really like about Heliostar is they're embracing the digital marketing. And so, they're doing things in a unique way on the digital marketing, on the projects, on everything. They're deal making. And I think that's an important thing these days, that you got to be out there telling your story, because investors have a lot of opportunities and they kind of need to have someone keep pounding that table. And I'm going to be doing that. Charles is doing that. But again, do your homework and have a great day, and we'll talk to you soon.